You ever wonder why doctors want to invest in real estate? A lot of people ask me this because, yes, it's true. A lot of doctors are in real estate and they want to get into real estate if they're not. And if you see a doctor investing in anything outside of the stock market, it's probably real estate. So, why is that? Well, there are a few great reasons why doctors want to invest in real estate. Number one, this is real estate. We all live, work, and play in real estate. It's something we understand. We get it. We have a tangible, real understanding. That's because real estate is a real asset. That means we can touch and feel it and go experience it. And that makes it very attractive to us all because we feel like we get it. We feel like we understand the real estate market. We know how to buy and sell real estate. And we understand how to maintain it because we've probably lived in a home at some point in our lives. So that is one reason why I think real estate is generally an attractive investment to a lot of people. They have a tangible understanding. And along with that comes control, because when you can actually go visit and look at it and touch it, pick up a hammer and fix it, it gives you a sense of control. And you feel more secure in that. You feel like you know what's going on, as opposed to buying a stock in Apple or some other company. You don't really get to participate in the day-to-day operations. You don't really know what's going on. If the dividends are going up or down, you have no understanding of why that's happening. And so real estate being very tangible, very local, very personal, gives us that greater sense of proximity to the control and gives us a greater sense of security. And I think that's why people enjoy investing in real estate. And now the more technical reasons is that it's less volatile. It's a hedge against the volatility of the stock market. So what does that mean? Well, the stock market goes up and down, as you might know, and real estate just doesn't change that much. It doesn't change that quickly. And even when real estate loses value, it's not going to go to zero because it's a real asset. It has some intrinsic value. And I think that again adds to the level of security that people feel, and it provides a hedge against more volatile assets that might be in the stock market. And then along with a hedge against volatility, it's a hedge against inflation. So inflation, as you know, is the rising cost of living. It's the rate at which the cost for goods and services is increasing. That rate is increasing, so are rents. And the revenue from rents is what determines the net operating income, which then determines the value of that real estate. So generally, let's keep up with inflation and therefore preserve your overall investment, because your investment value is rising with inflation. So your investment's not taking a toll. Now, this doesn't always happen. Sometimes rents do not keep pace, and that can be a problem. But generally speaking, we expect rents to rise with inflation and therefore help you maintain the value of your investment. And along with all this comes correlation. Real estate is a non-correlated asset, which again goes back to our discussion of volatility and the stock market. So correlation between two assets means they behave similarly. So they go up and down together. That's what correlation is. But real estate is a non-correlated asset, which means that it does not follow the ups and downs of the stock market. So it can stay more stable during those downturns, hopefully do better. So that's why people invest in real estate, because it provides that hedge against the volatility. And the reason it provides the hedge against volatility is because it's not correlated to the stock market. And why is it not correlated? Why doesn't it change with the stock market? Is because the drivers of real estate value are not the same as those that affect stocks. And that's a really important concept in diversification, because you want to diversify. And the reason we diversify even within the stock market is that if one stock's going up, one stock's going on, they can cancel each other out, and you won't lose your overall investment or capital in the stock market. And the same thing is true for diversifying outside of the stock market, because the stock market is so well correlated with itself that it means that all stocks kind of go up and down down together. And traditionally, the way to balance that volatility of the stock market is to buy bonds. And bonds are very stable and have a fixed rate of return. But the downside of bonds is that they don't keep up with inflation. That rate of return stays the same even as inflation is going up. That's why real estate makes a nice investment, because it has that hedge against inflation and volatility. And then the last thing is that it helps with taxes. You might have heard that owning real estate helps you reduce your tax liability, but it really only helps with your passive income. It does not help with your active income. So if you have a W-2 or a 1099 job, that income is not offset by losses in real estate. But your passive gains can be offset by depreciation, which means you take your passive income and you subtract the paper losses or depreciation allowed for all the aspects of that property, and then you have less passive income to report and therefore less income tax. That's how people take advantage of the tax laws in real estate investing. So those are some of the reasons why physicians like to invest in real estate. And if you have others, please let me know. And if you're curious about how real estate syndications work, make sure to download my free ebook in the link below and check out our website at thedoctorinvestor.com. And thanks for watching. See you next time.